Welcome back. You're watching the CNBC TV 18 Budget Verdict, and we're coming to you live with the budget architects. Joining us now is the Expenditure Secretary, Mr. Bulam, as well as the DPAM Secretary, Arunish Chawla. Gentlemen, appreciate you joining us here on the CNBC TV 18 Budget Verdict, the very first time that industry will get a chance to interact with the budget architects right after the presentation of Finance Minister Nirmala Sitharaman's 9th budget. Mr. Chawla, let me address the other elephant in the room. Why did the government lose its disinvestment mojo, and what has enabled you to find it back, or hopefully find it back? You put a larger disinvestment number of 80,000 crores, but what was the reason why we saw you go slow on disinvestment? I'm not even getting into privatization, and why do you now feel that you want to be seen as reviving that agenda?
Government has not lost the disinvestment mojo, nor is it off the track. If you see how the disinvestment policy evolved, the Department of Disinvestment was set up somewhere towards the end of 1990s. And in the first 5 years was the learning phase where we initiated the disinvestment experiment. And somewhere around after 2004, for the 10 years, there was a hiatus, there was a window when disinvestment was put on the back burner. In fact, there was a talk about doing away the department itself. But in the next 10 to 12 years, which is the term of the present government, the disinvestment was reinvented as a composite strategy. That is why we are not called Department of Disinvestment anymore. We are called DPAM.
Yes.
And that means we light the lamp in the lives of ordinary investors. To do that, we follow a composite strategy. And that composite strategy is guided by what is called the Atmanirbhar Bharat policy for the public CPSEs, which was announced by the government in 21-22. Under this policy, we have arranged the public enterprise domain into 3 verticals. The strategic domain, which is essentially for delivery of public goods, and for ensuring the continuity of our supply chains, like natural resources, core infrastructure, defense, financial infrastructure, and so on.
Right.
Then there is a category called the exempt category, which is not-for-profit functions, which are the social functions, support to vulnerable groups, support to farmers, essentially the market failures that government needs to take care of. What is left is, in a way, non-strategic, but in a way, it is an invitation for the private sector.
Yeah.
And this includes a large number of enterprises which were erstwhile engaged in manufacturing. And in this non-strategic area, we take up both strategic disinvestment and closure as a composite strategy. Because in a macro framework, whether you disinvest or whether you close, it creates greater space for the private sector. It allows them to operate and acquire a greater share of the market and energize the economy. So it is part of that strategy. We've taken both of them together. Almost 25 enterprises have either been strategically disinvested or closed in the last 10 years, which is the highest ever done in the past. And going forward, we continue to revive this momentum. We have learned from certain iterations do not succeed, certain others succeed.
Okay.
The idea is to learn, reinvent the strategy, and move forward. And that is why you see a large number of 80,000. It does not scare us. It is done with our consent, and it reflects our confidence in our ability to achieve it. And if you ask me how this will be done,
yes,
we will use both traditional disinvestment methods. We will use a variety of market sales. And in addition to land monetization traditional, we have now invented and perfected new modes of asset monetization. And if I may mention, one of them is public InvIT. We got the SEBI approval in December.
Yeah.
And we hope to launch the first public InvIT before the end of the financial year. InvITs, as you know, are capital market equivalents of risk capital, which help us monetize the present value of user fee and redeploy it to create assets.
Right.
Honorable Finance Minister also announced in the budget yesterday that we will launch REITs for CPSEs to monetize their surplus land. This will help us securitize the future rental revenues and redeploy them in redeveloping these surplus lands without putting any burden either on the budget exchequer or on the CPSE, and be able to create greater use and put these idle assets to productive use, and also invite private sector participation.
So, plenty that you've laid out for us there in terms of what the DPAM strategy is going to be. How many lights are you going to light, lamps are you going to light this year, Mr. Chawla?
Excellent question. Let me give you numbers. 12 years ago, the number of DMAT accounts in our country was 4 crores. Today, it is almost touching 21 to 22 crores. So how many times is that? 5 to 6 times. And if you see the dividends, the fair dividends which CPSEs distribute, the CPSEs achieved record profits of 3 lakh crores last year, and they distributed record dividends of 1.4 lakh crores. And our analysis, if I may use a technical term, provides evidence that the CPSEs have first and second order stochastically dominated the Nifty 50 companies as far as dividend distribution is concerned. And with just 15% market cap, the CPSEs distributed 25% of the dividends distributed on the entire stock market last year. You can count the number and millions of lamps that we have lit.
Millions of lamps that you've already lit. And there's hands going up, so I'll get questions. But just to follow up on that, the REIT that the Finance Minister spoke about in the budget, what are we talking about in terms of the land bank monetization? What is going to be the size that will be part of this REIT? And any timelines by when we can actually see this REIT being operationalized?
Okay. This is going to be a new experiment. We've tried traditional methods of land monetization, which are difficult and time-consuming. This is going to be a securitized mode, where the title can remain with the CPSE. The land title does not have to change.
Okay.
But still, you can securitize the present value of its future revenues and use that to redevelop the same through a developer model.
So will it be individual CPSEs that will do these REITs?
Absolutely. We will identify specific assets, specific areas, surplus areas. And we already have done some homework. We'll sit together with the CPSEs. We will identify the developers. We will create technical consultants and a securitized framework where institutions and even people can invest, and we can redevelop.
How many CPSEs are on that list, on that short list that you said you've identified, the homework that you've done?
Let it evolve. It may not be right to give out the names right away.
Okay, but before I go back to the Expenditure Secretary, the appetite for privatization, do you still have the appetite and the mojo to do privatization, or IDBI Bank, one and done?
Not at all. Already, 2 privatizations have reached stage 3, which is the stage for bidding, that is the technical and financial bids. Everyone remembers Air India, but many people forget that after Air India, Neelachal Ispat Nigam in Odisha was successfully privatized with the Tata Group, and it is now running, and it's a going concern with its mojo back. And very recently, just in the closing year, we closed the deal for Ferroscrap Nigam Limited with a Japanese firm, Konioko. That deal has just closed just a few months ago in the last year.
Right.
And the enterprise is running successfully, and it is looking up. More will come, but it will not be fair for me to give the transaction-specific detail.
A quick question, sir, on privatization. this whole proposal to say that even if the government shareholding goes down from 51 to 26%, you'd continue to regard an enterprise as being a government enterprise and continue to sort of exercise. What's the plan out there, and is that really also giving impetus to this 80,000 crore amount budgeted?
Good question. If you read the economic survey carefully, it talks about alternatives. 1/3 of our listed CPSEs are already below 60%, and that much public wealth has been shared with the shareholders, minority shareholders. Going further, we have various options, various alternatives. Economic survey, as you know, is an ideation document. The economists are free to ideate. The policymakers have to be more cautious.
But you just finished telling us that you've got your mojo back, or your mojo never left.
Absolutely. Our mojo is back, and back with caution. So the alternatives
it's cautious mojo.
The jokes apart, the alternatives are being considered. One alternative is that you change the definition of a government company. The second alternative is to enter a strategic partnership mode, where you bring in a strategic partner, come down en route to a final privatization. Another alternative could be a joint venture mode, again with both private partner or public partner. A fourth alternative could be a mechanism where other government entities help you dilute. It does not remain a government company. It acquires the flexibility and the freedom to operate, and still being in a strategic area, the public control, a looser control, both directly and indirectly, is maintained to achieve the public goods. And yet, through all these modes, we can share greater wealth with the minority stakeholders, and also give more freedom to enterprises to operate and compete with the private sector in the open market. All these options are on the table. The pros and cons will be considered. One option may be suitable in a particular scenario. Another one may be more appropriate in another one. And that's how we take the best step forward.
But what would be most feasible, Mr. Chawla? You know, bureaucracy is also ensuring that you do the art of what is possible. So what do you think would be most feasible? Because, you know, I'm looking at it from a point of view, a strategic investor, etc. Would they not prefer a clean-cut privatization? I mean, you want to get out of something, get out of it, and let it go to the person who's coming in. Don't you believe that that would perhaps be the most feasible way forward?
Not just bureaucracy, the private sector and the market is also about the art of what is being possible. So what we do is to maintain a set of options. When we do transactions on the market, we don't go with one transaction. We always have a repertoire of 3 or 4. See the market conditions, see the assets, underlying fundamentals, and seize the opportunity. In the same way, we have various options. You know, sometimes, say, a public enterprise has a heterogeneous set of functions or operations. The private sector is now getting more and more specialized. So if instead of trying to privatize a heterogeneous set of operations, we can follow a cost center approach, or try to privatize a vertical which is more easily privatizable, then the chances of success increases. And that is why we are talking about a multi-pronged approach and flexibility, so that we move forward in the right direction in which the government and the Honorable Prime Minister wants us to move.
Okay. Mr. Vaidyanathan, you had a question, sir.
No, but just curious what happens like underneath, you know, in making of the budget. There are so many conflicting priorities. You have, you know, GDP growth, you need fiscal consolidation, you need investments of like massive scale, like 12 lakh crores in infrastructure, you need process reforms, that is one push. On the other side, social sector, SMEs, just so many priorities. And in the end, you're delivering a budget that is so consistent, that is, over the years. And of course, we can see that. So just curious, what we see is a final shiny output that we saw, which is so consistent with what all of you are speaking. Under the hood, how do you deal with conflicts that are happening here? There must be, and one or two instances on how you solve them will be curious, because for a government to deal with conflicts is quite amazing.
Well,
I'll request my friend to take that question.
Bigger questions, Mr. Chawla. My question to you, many public sector companies are still not meeting the minimum float requirements. Now, what can we expect on that front? Also, is there a pipeline of IPOs from the CPSEs that you're working towards? Is there a short list of candidates that you're readying for IPOs, sir?
Thanks for asking that. We have evolved a waterfall mechanism, which essentially means stage 1, stage 2, stage 3, stage 4. Stage 1, we identify a CPSE which meets listing criteria. Once that CPSE is taken up for stage 1, which means we launch an IPO and we try to bring the government equity down from 100 to 90. Once it has successfully crossed that level, we are confident a sufficiently thick market has been created, or a sufficiently stable market, reliable market has been created. The next step, which is stage 2, is to bring the government equity down to 75, which is the minimum public shareholding level. Like in any market, in any process of creative destruction, everyone will not succeed. Our experience is that almost 80% of CPSEs succeed to reach this milestone, but about 10 to 20% also fail to live up to the market expectations, which is when they go up into closure. After a CPSE has reached 75, successfully survived in the market, we have two more stages. One is 60 to 75. This is the stage of dividend disinvestment trade-off, and also a stage where the CPSEs start mobilizing capital on the markets through various options and routes that is available. We always encourage them to do that. And you saw the BCCL, the Bharat Coking Coal listing recently.
Yeah.
It was the highest, most responsive. It broke all records. 94 lakh investors and stakeholders participated in that IPO. And going forward, this company, which needs to modernize mining operations, invest deeply in the capex, will now have the market, the capital market, to raise those resources and invest in those operations. We are going to follow the same strategy for many other natural resource companies and their subsidiaries. Once we have reached below 60%, we are cautious, because that is the zone that is near the edge of the cliff,
right,
where for capital management, for capital restructuring, the CPSE needs that cushion. And so this is how it works. We are going to pick up a few more CPSEs for bringing them down from stage 1 to 2, from 2 to 3 in the coming year. And that is why you will see a few more OFSs or market operations or qualified institutional placements within this financial year, and also many more in the coming financial year.
Okay, so many more OFSs in the future, but also within this financial year, i.e. by March 31st this year,
Yes.
2026, we are going to see more OFSs and perhaps also QIPs. But sir, I'm trying to think, was it 2 budgets ago? I think it was 2 budgets ago that the finance minister had said insurance companies will also be up for IPOs. What's the plan on that front? LIC is of course done, but any others?
See, the General Insurance Corporation has been successfully listed, and it has also successfully crossed stage 1 of the waterfall mechanism. And it's there, it's doing well. It's also undergoing, it's the reviving its refinance operations and also branching out into other countries in the region. The LIC IPO was also a great success. It is already, the first IPO is done. Don't ask me when the next one will come. But when the timing is right, we are ready. But when the timing is right, market is right, and we think it is the right step forward, we will take it.
Okay, Ajay.
Good evening, sir. Sir, as I saw it, the 80,000 appeared aspirational, but you've clearly explained you almost have a deal-by-deal working for that. Two related questions there, sir. One, in the last year, we saw a few banks where you moved the stage 1 to get into the public float. Given a couple of deals which have happened on foreign banks, can we see some of that stage 1 moving directly into strategic now, given the interest? And second question, sir, is what's the plan on Vodafone? I saw that come into the books this year. Is there a plan, or is it too early and it was only to give them a AGR relief and then, the plan will come subsequently? Because that's a big number again.
Two smartly worded, sensitive questions. The first one, let's do the big one first, okay? Honorable Finance Minister announced yesterday the setting up of high-level committee on banking. So that is a step in the right direction. We'll come to it down the road. On the second one, we hold minority stakes in Vodafone Idea Limited, and we do not participate in the management. And that is going to be our strategy, and I would not like to speak any further on that.
Okay, so nothing more to be said on Vodafone at this point in time. But gentlemen, there is one question. Let me go across to gentleman here before we take a quick break. Go ahead, sir.
Hi, Anshul here from representing Aspero. I just, so since you guys have mentioned that there is a sustained push on public capex, we're also seeing government borrowings growing, although net borrowings have grown marginally. But what is government's plan to ensure that, there's no long-term impact on the interest rates and also crowding out of private investments? See,
we monitor the capex of public enterprises on monthly basis, and the target this year was very decent and good. About public enterprises and public bodies to invest about 6 to 7 lakh crores in capex this year. It is on track, and as per our last information, almost 70% of the target was met by December. And we endeavor to provide a graduated, consistent support to the economy through this mechanism. And we have built in the capex performance of public entities and CPSCs into their MOU framework, which determines the corporate performance, also determines the pay and the perks of the corporate leadership. And that works. That helps.
Okay. Many, many thanks for joining us here and for giving us a very clear understanding and a path forward on how you present the execution of the promises made in Budget 2026. Ladies and gentlemen, big round of applause to the Expenditure Secretary and the DPAM Secretary. Many thanks for joining us. We are going to take a break here on CNBC TV 18. Our conversations will continue. We'll be joined shortly by the Chief Economic Advisor, Ananta Nageshwaran, the DFS Secretary, Mr. Ragaraju. We'll also have the Defense Secretary joining us, Mr. Rajesh Singh. All of that and more coming up for you on the budget verdict. Stay tuned. We're back in a minute.